The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the January 24th, the fantastic, fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary day, an extraordinary weekend, an extraordinary life. And the easiest way to do that, well, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered too. You can send me an email. Let those fingers do the walking. Steve at TFNN.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Last Show. Right now, we got all the indices trading in the red. The Dow's up 144, about 0.5%. S&P down 0.7%. NASDAQ off about 0.5%. The Russell's down 1.25%. Semis are off 10. So let's start with the indices. Well, in a minute. Spot volatility index is up $1.70. That is 13% one-day rate of change right now. So each of you know the game plan here. Now it will be the end of day. The game plan being if there's a one-day rate of change greater than 10%, today you'll want to expect some type of bounce Sunday, Monday, something along those lines. You've got the gold up $6, silver 24 pennies. Light sweet crude is off 20 cents. Treasury bonds are up almost 1 full point, 29 ticks as we speak right now, leading the charge to the upside. eHealth up $27, 28%. Atlassian Corp is up $12, 10%. Arista Networks about $10. WEX down is up about 8. To the downside, Booking Holdings is the big dollar loser, off $28, 1.5%. AutoZone 22, Intuitive Surgical 21, 22. Amazon is off 16. Google down about 11. But let's begin by taking a look at the indices. Normally we go look at the futures contracts and so forth. And I do have a couple of questions that have come in. We have call ahead seating. Call ahead seating means we've got to go out to our first caller, and that is going to be Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How are you today?
I'm doing great. How are you, Steve?
Very good. Thanks so much for asking. And I know you called about Micron Technology. I believe that you have. Tell us what you're looking at and how we can help you.
Well, I bought Micron a little bit back, and just wanted to get your analysis on it. I'd like to see if it's going higher. They were upgraded on a report that DRAM and NAND gates and everything were finally bottoming out, and they would be likely to be moving up. But since then, it did go up a little bit, but not much. And so I just want to get your analysis on it.
Sure. So, we start by taking a look at where's price trading in relationship to resistance. Resistance here would be the top of a daily profile. If you're above resistance, well, old resistance can become new support. In the case of the daily time frame chart, Jim, the level that you would be watching today would be 58.48. Price right now trading at 58.27. Is there a big difference between 27 and 48? Well, there is, because 58.48 is the top of the profile. And if price is able to close below that, that's right now, potentially still support. If price is able to close below that, you're back inside the profile range, which could take price down to 56.77 or 55.06. Price is above the weekly and the daily, so there's no real resistance there. And we know that in the case of Micron, its all-time high is around 64.66. So then the next question is, are there any charting patterns that are suggesting that this is a top inside of Micron? From a wave count standpoint, I don't have letter G, meaning wave number 7. Price has been moving higher, doing less relative energy, but we still don't have a bearish reversal candle here just yet. So at this stage, when I take a look at the daily time frame chart for Micron, this just suggests if price closes underneath the top of that daily box, some type of retracement. The additional levels of support there, as we talked about, were either the center or the bottom of its profile, 55.06 out there. That's what the weekly or the daily time frame chart shows us. If I look at the weekly here, switch over to that. As far as where we at wave-wise, you're going to be in bar number 8 from a weekly standpoint from a TD setup 9 count. Now, Jim, you and I know that bars 8, 9, or 10 can be or the bar after 9 can be the high on a TD 9 count. In fact, the last high that took place out here going back into February where price stalled, that was a TD setup 9 count pattern on a weekly basis. Price above Stevie's green line. So it suggests a retracement perhaps, but here you would see support at about 54.39. So that's what I see when I take a look at the daily, weekly, and really monthly time frame charts. What question, and take a look at it that way, what question do you have that I can try to come back and answer?
I'm not sure. That I'm a novice at this. I'm just trying to learn, and I think that it in my mind, I used to be in electronics, and
yes.
In my mind, the chips always trade like a commodity, and when there's a shortage of DRAM, the price goes up. when they're plentiful, it comes down and stuff like that. So
sure.
Learn about.
Yeah, so fundamentally, the best person, as you know, within the TFNN family would be David White. So he's got this whole thing, fundamentally, as well as taking a look at technical analysis. From a technical analysis standpoint, with the daily time, I would say 58.48. If there's a close below that, I would anticipate some type of retracement. The topping patterns that I use aren't present. That doesn't mean that it hasn't formed a top, but you've got some support levels that have to be busted through in order to suggest it is some type of top of significance. And for right now, I would say that level would be 55.06. That's the level that I would be paying attention to. And then just below that was that weekly oscillator and change line value of 54.39. So if you see it close below 58.48, even though fundamentally you're saying, hey, prices should move higher, you've got to do the calculation in your mind. Is it okay if price pulls back to that area, for your trade? And if not, then, you've got to maybe come up with some other decision here.
Okay. Well, I really appreciate it, Steve. I watch your show every day.
Well, thank you. One of the things we'll do after we hang up and then we come back to the next segment because we're about to go to the break, I do want to really go through the daily time frame chart for the indices out there. So we'll make sure that we certainly cover the semiconductor index just to see if there's any kind of topping signal there, or is the semiconductor index in essence showing the same kind of patterns that we take a look at when we look at Micron Technology, MU. All right, Jim. So we'll see if there's anything new there. If not, then we'll just leave the prognosis with Micron is paying attention to 58.48 today.
Okay, sounds good. Thank you.
You bet. Thanks for calling. Have a great day. That was Jim in Palm Harbor. This is Steve Rhodes with TFNN. Dow is off 170, S&P down 27. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's get right into it and take a look at the indices, what's going on. You might want to take some notes here, or maybe not. But here is the chart of the Dow. Now, I'm not going. Many of you that are listeners, you've seen my seasonal chart that takes a look at the last 86 years worth of data inside the Dow to give us on average when the Dow forms tops and bottoms. And what you're looking at here, you're looking at 2018 in red and green, and then 2018, I say 2019, and then 2020 right now in the yellow. So in 2019, all the cycle dates, tops and bottoms, came in earlier. 23 on the bottoms, it was 23, 16, and 7 days. At the tops, it came in earlier by 22, 19, and 4. In 2020, we're anticipating the first top was supposed to form, on average, would have formed around January 6th. The actual high inside the Dow came in 9 trading sessions later on January 17th, or at least at this stage. So there's a reason for us to believe, just seasonally speaking, that there is some type of top that typically would last through the end of the month. Now, if it comes in, if the top came in 9 days later, will the bottom come in 9 days later as well, or some other fact? I don't know, but we'll watch for patterns. But I want you to consider this, take this into consideration out here. The seasonal cycle had no way of knowing that there would be some kind of SARS type of aspect going on out there. But let's just go look at the charts, pay attention to the patterns here. So let's look at the S&P 500. Let's begin with that. What's on the cash indice? What's the topping pattern that is present? A TD9 count so far is the all-time high out there. It was in wave number 6, letter F, but a TD9 count. What this suggests to you and I here is that price will pull back to its breakout area that was established by that 9 count. That's 3260. Doesn't mean that's the buy the dip for the daily folks out there, but doesn't mean that it will hold. We won't know until we see price get down there. How is price moving as it gets? But that is where the S&P 500 broke out. Look for that level to act as support. If it doesn't, then what you're looking for in the S&P 500 is move back to 3126 in lieu of any other patterns that might form. There's no pattern at this stage, but there is the topping signal in the S&P 500. Okay, great. That's 1 for 1. Let's go take a look at the Dow right now. As we take a look at the Dow, what did it do? Well, it formed a wave number 7 pattern. That is letter G up here. It does have a TD9 count, but it doesn't qualify based on the way that you and I look at that, which is the high of that count would have to occur on bars 8, 9 to the bar following 9. Nonetheless, there is a topping signal here. This would suggest, so maybe it's the Dow that'll give us the soonest piece of information as to whether or not breakout support will hold. That's at 28,789. If we see it close below that, I'm not referring to today, then that brings into play 27,801. So we're 2 for 2 with regard to topping patterns that are present on the daily time frame charts. If we take a look at the NDX 100, the Harley the Hog out here, been moving higher. Well, today happens to be bar or wave number 7, letter G out here. And so therefore, if price is able to close below 92.03, it suggests a move back to 87.13. Now, we're going to go take a look at the TAS market profiles for the equity futures contracts because those are areas that you're going to have to watch as well. But I'm giving you the cash indices out here. Most people don't trade or access the futures information. If you are a pattern person, you have to. You just have to. It just provides way more information than 6.5 hours worth of trading. If we take a look at the Russell 2000, so we've got 3 for 3 in topping patterns. That's the S&P, all tradable, right? S&P, Dow, and the NDX 100. Look at the Russell 2000. It has a Rhodes momentum indicator top. It generated that with that bearish reversal candle to the downside, that gap to the downside 4 trading days ago. Its price target to the downside, first one would be 1620. So now we're 4 for 4. I'm not picking, I'm just going in order out here. Now we start to, well, let's go to the SOX. Jim had called in about the SOX. What do we have inside the SOX? What would be the picture that we have here? Jim, inside the SOX, there's clearly A to B equals CD patterns, on the way up. There is a plethora. No reason for me to go ahead and draw those in. There is a plethora of A to B equals CD patterns. This is a bearish reversal candle. If the semiconductor index closes today below 1934, that's going to suggest to you more of a pullback inside the semiconductor. So watch that level. I know you're also watching the top profile level of Micron, but if both of those close below their levels of support, and preferably it would be for 2 days. I like the 2-day rule out there. That suggests a pullback. Now, inside the semiconductor index, you'd be looking at 1714 as a possibility out there. So that's a semi. So now we're basically 5 for 5 on topping patterns out here. Let's look at the transports. What do we have going on inside the transports? Well, in the transports, I really don't have much. I would be having to, kind of fudge an A to B equals CD pattern. Is there a small one here that we could say looks like this? Yeah, I guess we could. Should we? Yeah, maybe. I'm just going to leave the Dow transports as kind of a question mark out there with regard to a top. But I don't believe the transports will be able to hold up the entire markets. NASDAQ, different story. But the transports, probably not. How about the XAU on a daily basis? What do we have? We've got a nice move here, right? A little bit of a move in gold. And the miners out there, be careful. You've got a Rhodes momentum indicator top. All prices done is moved up to test a key level of resistance. That's Stevie's green line. So this already has a topping pattern. This could just simply be setting up the C, the B to C leg of an A to B equals CD to the downside. So I suggest being careful there. If we take a look at the NASDAQ composite, what do we have out here? The NASDAQ composite, A to B equals CD pattern, certainly that we could draw in here. Bearish reversal candle. This would suggest a potential pullback to 89.43. Now, of course, it's all going to depend upon today's close. If we get some huge rally going into today's close, these bearish reversal candles go away. But at 1:24 in the afternoon, this is the signal they're generating for you and I. If we go ahead and we take a look at the Wilshire 5000, it topped with a TD setup 9-count pattern. This is suggesting the first level of support at 33,192. Really important because this is going to cover the larger swath of the market. So you're going to want to be paying attention to 33,192 out there. We can't trade the Wilshire, but we sure can use its signals out there. So basically, we didn't get to the New York Stock Exchange. Let's not leave this guy out. Inside the New York Stock Exchange, what do we have out here? We got a Rhodes momentum indicator top. This is suggesting 13,941. 0.52, quite frankly, is the level to be watching. If price closes below that, it may be generating a larger signal for us of a larger pullback, and its next area of support will be 13,515. So we looked at all these charts. We weren't trying to game anything or what have you. Just look at the patterns that you and I pay attention to during the 1 to 2 o'clock hour. Of course, I pay attention to them 24 hours a day out there. You tell me whether it looks like we've got some type of short-term top that is tying into the seasonal pattern that should take price lower into the end of the month or beyond out there. Well, what are the other levels that we need to focus on and pay attention to? Those would become our TAS market profiles. We do have a new one inside the ES Mini. The NQ, Jay, this just populated. It wasn't there at 1 o'clock as we began the show. We'll give you those numbers. Whether they're going to take hold or not, I really won't know till Sunday. But at this stage, let's go with the information we've got. Inside the ES Mini, the key level there, if price closes below 32.68, that is the bottom of its brand new, well, it's been in place now for 2.5 days, brand new daily profile. That would suggest lower price. 32.54 on my chart out here happens to be the 2019 high. Whenever you trade above a prior year's high, the markets are still bullish. So from that larger term picture, it's still bullish out there, and price needs to close below support on these daily time frame charts to suggest a change in trend. This is Steve Rhodes with TFNN. We'll get to the questions. We'll get right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that we'll even can give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Dow's up 181 at 185, S&P down about 30 points. Let's get to some of our questions that have come in. The first one coming in from Ruby wants to take a look at light sweet crude. So if we take a look at light sweet crude, here's what we know, Ruby. Price is trading below the bottom of its daily profile, the bottom of its weekly profile, the bottom of its monthly profile, and then the bottom of its quarterly profile is 49.18. So one target area for the light sweet crude would be 49.18. If we bring over Stevie's daily time frame chart out here, we're going to see that what price appears to be doing is targeting its breakout area, next breakout area, which is 51.75. That's really the key area out here. Now we can also see that my oscillator and change line changed colors from green to red. In this instance here, I'm not anticipating that what we will see is the test of that line, because that really occurred the bar before the line turned red. So that's actually a very bearish signal out there. And so it does look like a lower price. We can't see that light sweet crude top with wave number 7, that is letter G out there. So 51.75 to the 49.18 area would be what I would look for as a target. Of course, you're going to want to look for some bottoming signals or patterns down there. The next question that came in, let me get here to the emails coming in from Michael H. You want to take a look at SunPower Systems. Now, Michael is trying to understand, he's trying to figure out, is this a candidate to purchase on a pullback out here? So let's go take a look at it. Let's look at, well, let me do this first for everyone. SPWR. First, that is SunPower Corp. So SunPower Corp right now is trading inside of its daily profile out here. It's a bearish structured profile. So the first thing, Michael, from a profile standpoint, 872 would be a normal place where, because there's both buyers and sellers at the center of the box. So even though price is back inside this profile, you need to see a close below 872 to suggest a move back to 821. So kind of keep the 821 figure in your mind, but watch at 872. You can see how it's really acted as support. Again, buyers and sellers. There are a bunch of sellers up at 897, but the buyers are right now, price needs to close below 872, not 870. Or 869, you know, I don't know, 10 cents, 15 cents, it's got to close below it, and then you'd be looking at a move down to 821. Price is just consolidating with inside its daily profile out there. Resistance at 940, support at 724, and price is just trading with inside its profiles on the monthly time frame as well. Now, when we take a look at the daily time frame chart, let me pull this one over here. It's got all my auto-populated tools and so forth, so let me just punch this SPWR. So let's just punch this up here, SPWR. Let's just go see what we've got. Wave counts, TD9 counts, the whole 9 yards out here. That's the weekly. Let me come over to the daily. So on the daily time frame chart, here's what we see. So we can see that this has both one 7th wave move, that's letter G. The red ones out here refer to my primary counts. It also has a TD9 count top. Yesterday's high, the bar following bar number 9, that can be the top there. And the oscillator and change line had turned red to green. In this case here, this is suggesting a test and retracement of that level, getting back there somewhere around 847. So there's another potential, but you've got a topping signal out here. The better opportunity to buy would be a pullback to its breakout level. That is 770. That's from the trading session or the low of January 11th out there. So that's what the daily time frame. Daily time frame suggests a further pullback. Use that market profile level. If there's a close below that, expect price to at least pull back and test the bottom of that box. On a weekly patterns out here, this has got a TD9 count bottom. So it would be a good reason for you to be looking to enter a long position in SPWR. But right now there's a pullback, and you just have the general areas. I think you also may want to be paying attention to the markets in general as well. But that's what I've got when I take a look at SPWR. So in summary, there's topping signals on the daily, a nice bottom signal on the weekly. Looks like this wants to pull back further. So thanks for writing in. Let's go to the next question. That one coming in from, let me just stay with this set of charts out here. This is coming in from Jim, who says, let's take a look at FCX. Now, we looked at FCX yesterday. Not that we won't do it again today. I think it was yesterday or the day before. What I really want to say is, look, if you are trading Freeport-McMoRan, that's the chart that we're looking at, folks, you are really trading the Australian currency. So you are really a currency trader. The correlation, and I don't have the time at the moment to go pull that chart up, so I'm just going to have to ask you to trust me on this one. Or go do the work yourself, and you will see the directional correlation between the two. But you're looking at this. Can you take a look at FCX? It's getting close to a buy. Also, if you have time, can I go take a look at gold? So when I took a look at the XAU on the daily chart out there, just getting back to resistance, I cannot suggest that anybody buy any of the mining equities. This may be setting up the C leg, the B to C leg of the A to B equals CD to the downside. I just suggest caution out there. A lot of caution. Now, with regard to FCX on a daily basis out here, this has a Rhodes momentum indicator top. That formed with this gap to the downside on January 15th. That was the bearish reversal candle for that pattern. So as we pull FCX back, it's below its daily profile. This is suggested that it could pull back to about 947. It's trading at 1173 right now. Is there some type of entry into it that not that I see on the daily time frame, Jim? So I would just simply stay tight on the weekly time frame. What FCX is doing is what you did want to see it do, and that was, look, Stevie's red line turned green, suggesting that we would see price and that level test each other. What you didn't want to see is price trade below it. And if price closes below 1192 today, now that number might change by a penny or two, and we're at 1173, that too is suggesting a further pullback. A pullback to where? Well, it could be 1096, the bottom of that weekly profile, or it could be 951. In either event, and you get a nice little shooting star yesterday, so I'm suggesting that really you just be careful here with regard to FCX and go take a look at the Australian currency out there. Well, actually, here, let me just do this. It would be, 6A, and it would be the March contract. Let me just see I guess you have to really type it in correctly. Let me just try it one real quick. 6A03-20. Let's try this correctly out here. Let this populate. And come on, do it. This is still Freeport-McMoRan. There we go. So as I take a look at the Australian dollar, well, interestingly enough, and this is not a setup, folks, but take a look at how price here is also below Stevie's oscillator and change line, the red line, suggesting a further pullback. That further pullback we'd be looking at, this is the weekly time frame chart, back to about 67 cents out there. If we look at the daily, this formed a TD setup 9 count. Price is below the breakout support. It did hold for a while. That was at this point 6864. This too is suggesting lower price. So now you've got here's the proof is in the pudding, just simply the correlation between the two. Make sure you get both right if you're trading FCX. Make sure you understand what the currency is doing. Let's go out to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you doing today?
Doing quite well, Steve. How about yourself?
I am doing well as also. I see we're about to go to a breakout here. Thanks for holding through it. But I believe, is the ticker symbol that you want to look at ACOR?
That is right, yeah.
Okay. In about 15 seconds, if you can, tell folks what you're looking for, and then we'll get right to it when we come back from the break.
I don't have a position. I've just been watching it for several weeks, and just wanted to get your opinion, thinking maybe on a pullback, some level of support that would make sense, but I wanted you to take a look.
All right. We're going to go take a look at ticker symbol ACOR with Brent in Martinez, California, when we get back from this break. This is Steve Rhodes with TFNN. Be back shortly.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Dow's down 211, S&P is off 32. We're going back to Brent in Martinez, California. We're going to take a look at Accordia Therapeutics, Inc. We can see that from a profile standpoint, Brent, here's what we've got. Prices above the top of the daily profile. That was $2. Even Steven out there. Prices in between the weekly, and prices tested and rejected the bottom of the monthly so far. That's at $2.56. The center of that box is also at $2.56. So there is a level of resistance out there. If we look at the daily time frame, one of the reasons that Brent or anyone should be looking as an entry into Accordia is this formed back here with the TD setup 9 count. It was bar number 8. That was actually the low out there. So we had that pattern going for it. We also had price moving lower, doing less relative energy. Here's your bullish reversal candle. That took place on December the 4th out there. We can see this nice little wide-ranging bar on December the 27th out here. And right now what price is doing is coming back and it's testing a key level of support. That was $2.21. So Brent, if you're looking for an entry area, and you're willing to give it maybe a little bit of room, 221, we're trading at 223, is one of those levels. If there were a close below 221, then we would come back to the center of the daily profile. No, at the top of the daily profile. My apologies. That's right. In this case here, the bottom and center are at the 178 area, which would be $2. And that really lines up with that breakout candle from December 27th out there. So that's what the daily time frame shows us. Daily time frame says if you're looking to enter, now could be the time. We'll go look at volume on today's pullback as soon as we move over from this chart. But here we also have a Rhodes momentum indicator bottom. This is on the weekly time frame. Price moving lower, doing less relative energy. Here's the bullish engulfing candle out there. So this is giving us all the signals that in this case here, price can clear $3.10 on a weekly basis. That is resistance. You can see it move all the way up to $10.34. So now back to the volume to see what today's volume is on its pullback as it comes back into a key level of support. Stevie's red line, wow. Look at yesterday, this thing moved higher with 8 million shares, and today, so far lower with 1.5 million shares. So that's what I see when I take a look at Accordia Therapeutics. What questions does that pose for you?
No, that definitely defines it better. I liked it. It had some signs of strength off the bottom. You can see there's some decent volume, which is always encouraging. And no, that helps a lot. That's what I wanted to know. I was considering maybe taking a position here. I'm not even sure how much I want to be going long anything right now with the market. I think we could have a pullback. So something to keep in mind as well. But just use stops, I guess, if I'm going to try it.
Yeah, it looks good, right? So from the daily and the weekly, it's given us nice bottoming patterns here. The only day that is January 15th had a little bit of volume to the downside, but still in comparison to the breakout volume, which was December 26th, the day after Christmas, my goodness, which should be a light volume day in trading, that's its big volume push off of the bottom out here. So I really think it's in the range right now to at least nibble at it, dip your toe into it. Of course, it could be the best time reward risk out there. The average true range on this is about 28 cents a day. That's over the last 10 days. But I see the reason to take a look into it, and today I hear you on the overall market. So, but as far as the stock itself, forget about the overall market. It's really right in the buy zone right now.
All right. Well, thank you very much. See, that's really helpful as usual, and just have a great weekend and a great rest of the day.
Great. You do the same. Thanks for calling. Always good to hear from Brent in Martinez, California. Of course, it would be great to hear from you, too, whoever you are. But let's go take a look at the we're going to have a couple of more questions, I believe, that are out there. So let's go take a look at this one coming in from Lee. Lee wants to take a look at ticker symbol WRTC. So let's go pull that up on the screen out here. WRTC is a wrap technology right now trading above the daily, weekly, and it's an IPO that takes us back into June of 2018. Still not enough monthly data, Lee, for us to be able to grab any kind of market profiles. WRTC, your question here is, you've been in it for a while, and you're up fairly big, just wondering what we see going forward. So, hey, you're above resistance, 659 or 698 out there. So I don't see a reason yet to do anything. Let me look at let's go look at my other chart, see what we see. So if we look at wrap technologies, we'll wrap our head around it. Whoa, hold our horses out here. So the concern that you would have out here, Lee, is this has formed wave number 7. That is letter G out here. Price has been moving higher, doing less relative energy. You got the bearish reversal candle yesterday inside this, but price hasn't broken through a key level of support out here. So this is one of those where there may be just simply a tug of war between the bulls and the bears. I'm letting you know there's a valid top that's in place. Has price busted through any level of support? Well, the first level of support would have been old resistance. Well, that was $6.80. That's the high from December 27th. That's what set up that resistance level was established by that TD set up 9 count. That's been tested and rejected 2 out of the last 4 days out there. But 2 of those days that it didn't test it really never got down there. So we don't know if there couldn't have been a test and rejection. But we do have 2 tests and rejections. I would stay put, just knowing that this may just simply consolidate sideways. If it gives way, well, gives way would be you need to see a close below Stevie's green line at 673, at least a close below the top of the profile, that's 659 out there. My suggestion is, hey, just be cautious. Just be cautious. Make sure you have a stop in place out there. You've got a good trade. There is valid topping signals on the daily. On the weekly out here, what do we have for the weekly time frame? For the weekly time frame, price is moving higher, doing less relative energy. Just began that process. No bearish reversal candle or anything. We can't see how prices pulled back to prior resistance, that bearish engulfing candle on a weekly basis from back in April out there. But I would still stay put as we speak right now, as we take a look at WRTC. TC. I hope that helps you out. I believe there were some questions inside the Tiger's Den. Let me expand the screen out here, see what we see. Satish wants to take a look at ticker symbol XBI. Let me do that. Let me just stick with the auto-populated charts out here. XBI. We'll switch over to the daily time frame. Let me further read the question out here. The further question, so where did it go? Where was XBI? Where is it? In Tarpon 2, I see you've got one. Shoot. Oh, there we go. Satish. Where's support? Or for what it's worth, Acor CEO sold in December 166. Thanks. Support out here because on a daily time frame, first this has generated Rhodes momentum indicator top. It does that on December 26th with that bearish engulfing candle. Now what we know is prices below support, the bottom of its daily profile, 92.53, and so that opens up price pulling back to where it had broken out. And the breakout area on it is 83.73. So the daily time frame for XBI says 83.73 is the next level of potential support out there. Whoops, let's go take a look at the weekly time frame for it. Weekly time frame shows what? Shows a TD9 count top, price below Stevie's green line. Looks like it's going to close the week below that. 87.70 becomes its next target. Below that, you'd be looking at 78.58. So that's what I see when I take a look at XBI. Let's go take a look at, we got 15 seconds. When we come back to this break, I'll say I think there's one request that is outstanding. We'll try to get to that, and we'll certainly take a look at the spot volatility index and where it's trading right now. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish a gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
folks. So one of our dinners had requested take a look at ticker symbol EHTH. Was it EHTH? EHTH, yeah, EHTH out here. And my suggestion was to stay with the long position. What we're looking at here is price right now is trading above 107.36. It's going to close above 107.36. That was resistance. That was its key resistance level. It's above that. This could be setting up some kind of A to B equals CD to the upside. I would just stay with the trade with this. It looks pretty solid if you are in that. Now let's go back and take a look at what the markets are doing, specifically the spot volatility index. What you can see right now is it's up. The spot volatility index, I'll get it out, has had a one-day rate of change about 15% right now. Now, I don't know what this is going to be at the end of the trading. I'm sorry, 19%. It's up 19% as we speak right now. If there is a close with a one-day rate of change greater than 10%, then you really want to be keeping your eyes Sunday night, for those of you that trade futures out here, you really want to be focused on some type of pattern that might form. What would that be? My guess would be it would be some type of Rhodes momentum indicator pattern that would form out there. Because what we typically see, if I go back to the chart, is we see either a bounce or a bottom on that very next candle session. And the easy way to tie that in is just simply use the patterns and the tools that you and I cover here each day at between 1 and 2. And if you'd really like to learn those tools better, then sign up for Mastering Probability. There's archive workshops that will assist you, and a newsletter that will provide a plethora of information, the reasons why we do what we do as we take a look at trades or potential trades out there, and just try to use a fairly regimented process out here. So we'll watch that in the spot volatility index at the end of today's trading sessions. You've got the target levels on the cash indices. I don't know what else it is that I can provide you with, but key levels of support are just simply failing all over the place. And that suggests that sellers are in control right at the time when we anticipate some type of seasonal top that should take us lower for several weeks to come. Folks, thanks so much for being here. Stay tuned. 2 more great hours of programming are up next. You've got my favorite polar bear, David White. He's up next. Tom O'Brien to take us on home for the rest of the week. And I'll see you on Magical Monday. Have a terrific weekend, folks.
Since